This episode is brought to you by Sablier, the leading on-chain solution for token distribution. You'll hear more about them later on in today's episode. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hey guys, welcome back to another episode of the Lightspeed podcast. Today I'm joined by Kollan of MetaDAO. Sorry, we were just talking about pronunciation before this. Glad to have you on, Kollan. MetaDAO has become a pretty big story on Solana, specifically within the Solana ecosystem, but maybe more broadly within this idea of internet capital markets, ownership coins, launchpads, ICOs. I think there's a lot of things going on. And then I think Futarchy, kind of the initial piece of that, is really maybe the foundations of MetaDAO. I wanted to get into this story because I think it's become such like a core piece of what's happening on Solana and the broader movement there around internet capital markets and all these different things. So I guess if you can start us off with maybe just a little background on yourself and MetaDAO and Futarchy, kind of like where things have come from and where we're at now.
Yeah, cool. I was an early Bitcoiner. I was mining Bitcoin in Java applets and web browsers back in the day, and got involved in crypto in 2014. I built trading strategies, market making strategies, found Solana in 2021, started running liquidators on chain, ended up running RPCs and Solana validators, and had made my money doing trading, and came across Profit at a event during Breakout in Amsterdam. And he talked about some really cool stuff that had inspired me to go into crypto in the first place, right? Like programmable money. You could do a lot of cool stuff with it. And he was like, well, find the Discord. Here's what I'm working on. I was like, this all sounds really cool. Ended up pulling down the front end of MetaDAO in late November of 2023. And, was hooked ever since, went to Mountain DAO and became the co-founder of it all with Profit there. So that's a little bit of background about me. So
awesome. Interested to hear a little bit more about kind of the underpinnings of Futarchy and MetaDAO, the protocol itself. I know there's been, some changes to kind of what the core offerings are today versus where things have started. But I guess, can you speak to a little bit like the Futarchy thesis and how that plays into like some of the initial like doing governance for protocols via what MetaDAO has built?
Yeah. So Futarchy started in 1999 with Robin Hanson, also the creator of the AMM, for people that don't know that. That's always a fun little fact. But he wrote a paper called "Shall We Vote on Values but Bet on Beliefs?" And his thesis was markets seem to be pretty good aggregators of information, and in a rapid fashion. And they don't seem to play political games because, the opportunity to make money off information is the core thesis to the markets. If you're trading noise, then you're just going to lose money over a long enough horizon. And so, he said prediction markets seem to offer better insights than political appointees, board members, directors, all of these other things that when you have implemented prediction markets into internal structures, they seem to be better at doing the job than professionals when they get hired. And so, and he's debated that. He's gone through many variations or explorations on what that could meaningfully be implemented as. And Profit came across it working in Web 2 with his frustrations in a sufficiently bureaucratic environment where mid-level managers want to scale up their team so that they can be promoted to a general manager. And he came across a YouTube video of Robin Hanson talking about this. And so he left Ethereum DeFi and started working on this on Solana at the time. And so the fundamental thesis there is markets should be able to replace anybody in an operating entity. So when we talk about DAOs, we're talking really about decentralized autonomous organizations here. And, we implemented it. He built the first smart contract. We implemented it and we started running it for ourselves. There was some interest in DAOs using it on Solana externally. And so we rebuilt the program to be multi-tenant back in 2024, raised some money after we had deployed that. And then we got to this point where, we were using it for decisions. Some teams were using it for decisions as well, but adoption is going to be slow when you don't have the big DAO ecosystem that you have on, like, say, Ethereum. And we also understand that this is a new and novel mechanism. So does it have the IQ of a C-suite? And our argument at this stage is it's probably about 80 IQ. It knows enough not to burn 220 million in a treasury, but maybe not to make executive decisions at that level. But that's the big vision of what Futarchy could do at some point. But it's not going to look the same way that it looks today. You're probably going to have faster decision-making processes. You're going to have much more liquidity in the markets, many more sophisticated traders and participants. But we kind of got to this point where, like, it's working. Prophet likes to say nobody died because of Futarchy, which is a good metric to have. And it was like, well, where do you start to, like, place this so you can prove this thesis out? And one of the earliest places for us was, like, it managed the treasury, and you can actually do some cool things if this is market-driven decision-making, and you could have it control the mint authority, which is something that's pretty unprecedented in crypto. We mint 1 billion or 1 trillion tokens and then call it quits, right? Like, from there on out, we've got to deal with what that is. But capital markets, or, like, equity-based startups markets, do not work on that principle. Can you imagine if Facebook couldn't close the deal with Instagram because they're like, we ran out of shares, So capital formation seemed to be a good fit for it. And that's a place where you do want protections from a market that could decide this, where it's not pro rata representation of like voting rights or anything like that, right? Like, that's the problem you have with 51% attack. Here, if there's a well-capitalized party, they can trade, but they're making poor trades, right? The information is noise rather than alpha. And so there's an incentive to come in and trade against people with that behavior. And so the cool thing is you can't run away with the treasury. And that's, like, pretty systemic in crypto, or at least the history of it, or a slow burn, a slow rug. So this seemed to be like a perfect iteration or evolution to say, hey, at the capital formation stage, Futarchy seems like a very good place to inject this model of governance. And then, how do we do what we've done with MetaDAO, with intellectual property rights and other things, was like the continuation from where we are today.
I think that makes a lot of sense. I guess if I walk through it, it's sort of like, I don't know, we look at I can think of some failings of DAO governance, I guess. Like, some come to mind. People talk about, the Arbitrum Web3 gaming, proposal to spend a bunch of money on Web3 gaming, like a silly amount, 9 figures amount of money on that. But I guess to your point, and like this Futarchy and MetaDAO model is take some of those decisions out of the hands of just, like, people given one vote per token and put it into an actual market. The market is smarter than just, throwing things to the masses, so to speak. And then by doing so, that's kind of enabled you guys to expand, like, explore new ways to kind of implement it beyond just proposals. Now this is also, let's form new businesses. Let's raise capital and start new projects.
Yeah, and I think it gives a lot of investor protections, and we're trying to evaluate how to give more founder-friendly environment here, right? Like, we can swing one direction, but you kind of have to find the middle there. Yeah, like, as a startup founder, you need a lot of discretion on how you're going to operate and where you're going to go. But you also have in crypto this problem that you have liquid markets on tokens, and that doesn't exist in traditional markets for people, right? Like, you aren't liquid day one. Your equity, maybe you can do secondary sales when you hit Series A, Series B, but outside of that, right, like, you're looking for an exit or an IPO. And with tokens, you don't have that. So when we wrote about our performance package, there's, like, convex and concave curves, and what we're trying to do is drive a straight line, down the middle of both of those things. And I think that's really what we're trying to aim for here, that like crypto is a very unique space. You can raise money across the internet, which is really cool. And you can build real things on chain that generate revenue. And that revenue can be like guided through these decision markets. And you can do mintable tokens, which I think is really cool. And it gets us back on par with what is in the tool set that you need to be a successful business in the real world.
Yeah, I think that makes a lot of sense. On the mintable token piece, it's, we've been in this model where, historically teams just have so many tokens in excess for the potential future of, hey, someday we'll maybe use some of those and like reallocate them to a new purpose. But yeah, there's not been a start with X amount and we can add to that over time. That's not historically been the model. So I think it makes sense to kind of bring that back into the fold. Shout out to Peaq for sponsoring today's episode. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders, and the first machine economy free zone is live in the Emirates. And it's all happening on Peaq, the machine economy computer. Head to peaq.xyz to find out how you can benefit from the age of automation. That's peaq.xyz. Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Maybe we can step back a little bit and just talk about the actual Launchpad itself and kind of like the ICO process. A lot of discussion on this. Like I think people, have been pretty excited. Like MetaDAO sales have kind of taken over the timeline, at least within the Solana ecosystem, for quite a bit for the past few months. Curious about just like some of the mechanics there and like how that works out. Like this isn't like a pump fund or a fully permissionless Launchpad. So obviously there's some level of selection going on, and then like going from, kind of getting teams involved to like what that sale process looks like to then the token launch and then some of the decision making that happens afterward. I guess, can you kind of talk through the mechanics a bit?
Yeah, I mean, I think when we started this, right, like Futarchy is a novel mechanism. You're giving up intellectual property rights, right? Like you don't own the company anymore, in effect. And when we were going out, we were like, we have a total addressable market of maybe one person in the world that would be willing to do this. And now that you kind of prove it out and you kind of have this thesis of token can equal distribution, and there's a reason to hold these tokens, you don't need to create clever tokenomics or utility. It's, like the decision market is the ultimate arbiter here. So I think that that's cool. Like at a fundamental level, you get a lot of emergent properties that if you look into MetaDAO, how it functions, those become very, they're revealed very, very well. And you just have to think about it. And you can think about it from a founder side or an investor side, and you start to like it more and more. It's just one of those things that it's a slow burn. But as far as the process goes right now, I mean, we're looking for venture backable founders that want to, have a problem with, say, distribution. So they have existing users, but they have distribution problem. And, in general, I think that this is really good because you can imagine if you need to raise $1 million or whatever amount, getting 100 people to contribute to that should be a non-issue if you're capable, if it's a good idea. And, that's 100 people that want to see you win. And that's 100 people that have some idea of what your product and offering is, so they can come and participate in that. But I think what's interesting about our model is we're not first come, first serve. We don't have a bonding curve. The ICO price is set to the committed amount or the accepted amount from the team. We're changing that up a little bit now, where we think that we're going to go to completely uncapped raises, just because the gaming that people play when they know that they're going to get 95% refund is not a fun game. It's cool, but it gives you no visibility of like the underlying market structure to understand what the value is there, right? Teams just see 100 million committed and they go, well, I could take a lot. And you're like, we just don't think that demand exists there. At least here, you'll probably be more accurate. I think teams will still overraise, but overraise with respect to what? They may be overraising by 10 to 20, maybe 50%. And what we're doing with that is depending on what the team's minimum raise is. So they set a goal. Teams come out. They say, hey, I need to raise at minimum to operate for the next 12 to 18 months, $2 million. With the uncapped raise, they could end up raising $8 million. But the net difference between what their minimum was and what they raised, what the total committed amount was, will go into a bid at the ICO price, minus any expenses that they withdraw from the treasury. And that will create some like support there that says maybe 8 million wasn't the correct amount, but 6 million was. So 2 million could be absorbed in the market without net negatively impacting the token and creating a arbitrage between the value in the treasury and then the value of the token, which people are paying attention to. People are trading this stuff. They're finding these deals and then they go, hey, we could create a buyback proposal there. But more broadly, just go back and circle back. Teams come to us. I have people submit through Typeform. We go through it. We just look for high quality teams right now. We do have the permissionless model in place. We're studying it to see how it works. The mechanisms are changing. We're changing as we see people play these games. Polymarket for Solomon was one of those things that, cool that this stuff can happen, but net detriment when people think that there's funny games being played here. And you're like, guys, if I could move $50 million and invest $80 million into a project for $50,000, $500,000 of returns, there's much easier games to play. But yeah, so we sit down, talk to them, explain the system, explain the legal structures, explain how the treasury system, everything works, the mintable tokens, how proposals work, and just get that information together and then start to, say well, when is this going to happen? What do we have to do? Is there any important details that we need to get there? So that's the way it works right now. And then we're going to be moving to a permissionless system. And the important thing there, I think, why we're sensitive to this is we are very investor friendly, as far as a mechanism goes. And, I have faith that if you put 200 projects on this platform and they all raised and they didn't all deserve to raise, and, fair point, right? Not everything's investable, that liquidation would occur. But I think that if we follow the trends of typical startup boom and bust, if 90% on day one face liquidation, it's going to look really bad to founders on coming here and being serious. So that's the primary concern. I don't think we have any concerns about the underlying mechanism being able to clean stuff up. And I think it's actually better because teams that would run out their 18-month runway and then go out to try to raise again, the market will tell them, this is over. But I think in this case, it could tell them that it's over within 8 to 9 months. And then that capital can be reallocated into the ecosystem. And I think that there's something incredibly cool about that. And from a founder perspective too, you get out from underneath your token. And I think that for founders that have had tokens before that understand this, I think it's a really cool mechanism there to even be able to say market told me that this isn't working, or the direction that I'm going in isn't working, but now I can go on and just like VCs do, right? They invest in second, third time founders, even if the first one failed. So.
Yeah, I think that's a great point. And we actually, we've seen that. I don't know if there's been more, but I think Mountain DAO itself was one of the
Mountain Capital. Yeah.
Mountain Capital. Sorry, not Mountain DAO. Mountain Capital was the first ICO on the platform, but actually also the first case of returning capital to the token holders, right?
Correct.
So I guess, were there learnings from that, or was it really just a validation of, hey, it worked and people got their money back?
Tons of learnings. The program's evolved drastically from that. One was, we use squads behind the scenes. We have Futarchy that controls it, but behind the scenes squads is there. And that lets us execute any arbitrary instruction. Before we were limited to one instruction, but now you could build multiple transactions, do whatever you could do. And I think that was incredibly important because you got into these events where you'd have to transfer funds and then you have to trust the people to execute on behalf. In a trustless environment, I don't think that that's going to work out. So that was the first evolution. The next was, it took a lot of money to raise proposals depending on the ICO price. So I think Mountain Capital, it took about 150,000 in USDC and token in aggregate. And that's a lot of money. And then you can't trade the proposal that you just created because your capital's tied up. So we created the Futarchy AMM, and the Futarchy AMM borrows spot liquidity. That's like, it's a spot market primarily, but then when a proposal comes in, it borrows 50% of the total spot liquidity and puts it in a proposal. So you no longer have to provide the liquidity to raise a proposal, which I think was critically important for being able to like progress through this, because there's, like you have to count on either multiple parties pooling funds together to create the liquidity, which in of itself is like, okay, send me 150, send me 75K and I promise to give it back to you. So, and I think that's really cool evolution that came out of it. And then like the spending limits, I think was an important bit that evolved from this, which was, like, listen, teams have to spend money. Raising a proposal every quarter, for a budget probably isn't reasonable, but having some sort of monthly burn is probably acceptable. The fact that you can raise a proposal to, stop that at any point in time exists, and you can expand it too. Omnipair was the first one to go from 10,000 to 50,000 in the spending limit. So yeah, that was incredible learnings from that. And then also learnings from like a liquid fund, and then trading below its net asset value. You got to a certain point where the token traded below its value for so long that then you just have discount investors that come in and say, I want to realize my 20-30% gain here. Like there's nothing that you could do to put into an illiquid investment that is going to like net return me the same thing that I've got right here on the plate. So that showed us our sensitivity that we have to these projects that are trading under their treasury value for a prolonged period of time. I mean, you just incentivize the participants to not pass any additional proposals. They just want to wind it up.
Do you think, does that add any concern in terms of, limiting teams' ability to actually like bring a product to market? Or do you think that your expectation here is just that the market is pretty good at understanding these things. So if the thing has sat there, 30% sort of below the value of the treasury for 6 to 9 months, the expectation at that point is just, they're never going to succeed at what they're trying to build. How do you sort of like play that balance there in your head?
Yeah, I think that's why we built the bid program here. So, like if you raise in excess, at least you'll find some floor, and you'd have to eat through all of that net difference before you get to like actually eating into the treasury value to the point where you're like, hey, like this token's still trading below. The market's giving clear indicator that like buybacks probably aren't going to work because you had effectively a 3-month buyback. But at some point you do have token holder, like the sell pressure is eliminated, right? The question is, how many tokens do those individuals own? And that could be your believers that are willing to like hold that token, and then nobody can sell it beyond, a price for tokens that don't exist. But yeah, I think that like, if anything, it's far more aggressive than we'd like it to be, but maybe that speaks to stuff that's, like this may clean up crypto in a lot of ways. Maybe this is what's necessary to go through, and maybe people, like maybe there are projects that continue to limp along because they're really great at raising money, but terrible at bringing products to market. But yeah, like, is 1,300 users the end state for perp decks? Like, I don't think so. I mean, that's not the promise of what we're trying to do with crypto. So like maybe you do give way for additional competitors or people to move in. But it seems like crypto's pretty well comfortable with the status quo, and maybe this pushes us a little bit more aggressively into the alternative.
Yeah, I think that makes sense. It does seem that generally speaking, like we've seen this shift over the past year, maybe even 2 years, honestly, with the meme coin craze as well, but a bit of a kind of reaction function to the types of tokens that were available to people on the public markets, or the type of stuff that was coming from private to public, the market not really liking that. So
yeah, and if you look at like, I think Felipe from Thea, which is a liquid fund, he gave a presentation that said like, effectively what we've created is a lemon market for tokens. And there are great teams out there with great products that like are mission critical to the functioning of like this ecosystem. And their tokens are trading at significant discounts, relative to like its peers. And there's something fundamentally wrong with that. And, if you group and categorize those all in the same bucket because you're like, listen, there are no token holder rights. We don't know what the future holds with a lot of this stuff. And then, like we've gotten into this unfortunate situation where what teams can do is buy back and burn their token or buy back their token to say, hey, look, this is how much we value our token. But in no world does it, like a startup, start buying its equity if it can use that capital for better purposes. And I think teams get into this really paradoxical state where they are buying back their token on the public market with their revenue, and then conversely also selling tokens at discount to the private market. And it's like, do you need money or don't you? And if you need money, then you probably shouldn't be using revenue to buy back your token. And if you don't, right, then you probably shouldn't be raising additional funds, like on the private market. So yeah, it's very conflicting environment that just 100 years of finance says that this is not the way you do things. And then, leave it to crypto to say, well, we'll just reinvent all of it.
Yeah, that definitely rings true. I think we've very much entered this like rock and a hard place environment where the market wants you to buy back the tokens, but probably in most cases, you're at a point where if you were a company, you would not be buying back shares. You would be spending it on growth or other initiatives to kind of further expand the business and hopefully make more money in the future. That should be probably your ideal scenario. I guess, how do you think about, like, sort of with the context of started with Futarchy, brought about the ICOs. You just mentioned, there are plenty of projects that kind of struggle and sit there trading at discounts. The new MetaDAO like ICO model is great for people who are looking to raise capital maybe for the first time and start something. What about projects that exist today? Like, are you exploring this concept of converting or like transitioning an existing protocol into the Futarchy AMM and putting kind of adding on those token holder rights like after the fact, so to speak? Like, it already exists, but could we bring them over?
Yeah. And certainly something, I'm engaged with. I don't know where I put it on the priority list, but definitely have had teams reach out. I think that there's like, pull off the Band-Aid. And then there's like a lot of unknowns with it, right? Like, who is the first team that is going to burn their massive treasury and then convert to a mintable token? Because it exists there, right? And then the DAO is the foundation is, or obligated to go out and use this treasury to further the development of the protocol. And it's not certain that like that overhang is the problem, right? Like that FDV is the fundamental problem with investors. It could be like unlocks from investors. It could be, the fact that these token sales are not publicly disclosed, all this information. So I don't know that it's like a one-stop shop solution. I'd like to see some team do it just to have the experiment, but like, it's hard, right? Like, it's the same thing I'm asking founders is this is a grand experiment as well. And it'd be unfortunate to like have a project shut down because of this mechanism, but maybe it would have done it in a private market deal anyway. So yeah, we don't have the alternative environment where, like once you make this choice, like you get to see both forked options there. But yeah, I have teams that are interested. I think that there's a spectrum here, right? Like Futarchy governing a treasury is probably like very sufficient for decision making, because I think importantly here, you have traders that show up, not token voters. And token voters can have opinions about salaries and other things like this, but traders that are willing to put capital at risk and trade, like if they trade successfully, they will have more resources to trade in perpetuity. But from a token voter that disagrees with it, well, you get to churn them, right? And probably churn them at a premium relative to where they are today. And I think that that's something that's really cool about Futarchy is that even in the proposal, you can churn investors that aren't aligned, and then you end up with a configuration that is aligned. But yeah, I think, Futarchy as a indicator could be like the first thing. And then you probably have, mintable supply. And then you have like intellectual property rights that are kind of gated by Futarchy. And so I'm working across the spectrum. Obviously, we created the like early stage, non-existent entity structure so that we could proceed with this, which just transfers the intellectual property rights and any ownership rights to this entity that is governed by a Futarchy mechanism. But, like, how do I surgically, cut out whatever's in an operating agreement and then place in Futarchy? And there is a path towards that. The key there is I just have to pay lawyers and give them enough time to be able to do that. And I think that could very well be what ends up happening, is that you get, say, a transfer of the equity shares to a Cayman SPC entity or SP entity or a Cayman Foundation entity that is governed under this Futarchy mechanism, that is beholden to the token holders from an emergent property, because you can trade it, right? Like, price is the arbiter, but your influence can be through the actual trading of it versus like just blanketly voting, right? So yeah, like I am interested like how you bridge it over. One of the biggest things for me that I think like I just haven't put thought into that is coming up quite a bit is people with existing tokens, and like, how do you clean that up? And like, I respect these people an incredible amount because they're going through this process. They're trying to rate. I mean, all this stuff is incredibly near and dear to my heart as a founder, but you come to me and you're like, hey, well, we raised this money with this token. We're not interested in this token anymore because it's shit. And, like, now we want to do something different. And it's hard to be like, well, how does rugging one token and then coming over here to an unruggable make it work? And then even with that existing token supply, how do you manage that? Right. Like, I have big beliefs that, like, once it's in crypto and it's there, right? Like, Meta's migration is like, for example, it's forever, right? Like, everybody can do that forever. Mountain Capital's redemption is forever, because I don't know if somebody's in a coma, somebody has to, fly to 6 different countries to get their ledger keys, right? You shouldn't just steal from other people for this, but like, how do you do that if like that overhang always exists? And we've seen people like deal with this. Believe was an example of that says like, hey, you've got 14 days to do this. But I mean, I just don't think that that's the core ethos of like crypto, and you should probably like have a system in place for that. But it means that there's a lot of like open-ended, like, how do you solve for existing tokens? How do you create a new token? But post adoption of Futarchy, if you have a mintable supply or you have a supply governed under the treasury, say you transfer all of the tokens there, you can do the OTC deals that we've done. And I think that that's incredibly powerful too, because those deals trade at a premium. So the market does not accept discounts, even with locks. And I agree with the market in that case, right? There is a price. You can say, hey, this price, the liquidity profile looks bad, this price is memeable, whatever. But like, there is a marginal bidder that is paying this price. And so I don't think you can discount that fully and then especially come back and discount it even more. I think that then you should just be opportunistic in when you want to invest, right? Rather than not. And then if you are that sensitive to price, then that's you sit and wait for your thesis to play out, or you size into the position in the public market.
Yeah, that makes a lot of sense. I want to tap back into the point you made about, how you might deal with a migration of a token. This is an interesting thing that's kind of crypto only. Like, if you look at the stock market, there's no scenario where, hey, an acquisition happens or we're doing a stock split, and if I don't reply within 7 days, my shares get, devalued, kind of behind my back or sort of without me knowing. This is, we don't really have like baked in rights that ensure that the token you're holding doesn't just like go to zero when one of these events happen. I think we've seen this as well. Like with acquisitions, it's been pretty interesting, right? Because we tend to have these kind of like dual or even like multi-structure setups where you have like a foundation, you have a labs team, you might even have other teams kind of like associated with the development of an app or a protocol. Coinbase acquired Vector.fun recently, or maybe the labs team behind it. And so immediately there was like the question of, okay, well, does the token that was previously associated with this thing now go to zero and is worth nothing because Coinbase has kind of like the whole dev team and everyone that was building it out? I don't know if this is something like, does MetaDAO and this system of the unruggable ICO kind of address this problem as well, given that you kind of have, the token holders kind of owning the treasury and the IP? I'm assuming this in this model seems to be solved. So if you ran into an acquisition, you'd be clear.
The intellectual property there, is governed by Futarchy. So you cannot sell that intellectual property without raising a proposal, and without raising a proposal for the token holders to trade the value of the token appreciating or depreciating if this deal wasn't done. You would probably have to address the token holders, right? And in some distribution. I'm not saying that like it'd be in full, but like the important thing here is that value should not accrue outside of these like this structure. And that's what we're aiming for. And legally, like that's what we're just trying to get to. And from a first principles thought is like, listen, the problem is that value can accrue externally to this token. What's interesting about equity holders is they're often token holders themselves, and they're very liquid in that token holding, but not liquid in the equity holdings. So they should be highly aligned with the token value as well. And just to speak to, Vector and the Tensor team over there, I think that they did everything that they were supposed to do because they have an equity-based business and they have fiduciary rights. So, like you could argue that they could risk suit if they tried to do anything with the token because fiduciarily they're obligated to their equity holders. And that's like completely fair. And that's how the structure of the businesses work. And then what MetaDAO does is correct this to say, token holders don't have direct ownership. They have an emergent property that looks a lot like ownership through that proposal mechanism. So it could be, like one proposal away from anything, right? These tokens could be anything. But until then they kind of exist in this ephemeral state where they do have a say. And I think that that's incredibly important. But yeah, like, you could argue even in Tensor's case, like, hey, we should cut something for the brand equity because like the reputation may be destroyed if we don't honor something for it. But that's probably as far as you get from a legal and compliance place with the current structures the way that they are. And that's not anybody's fault, but the fact that the regulatory environment and the regulatory regimes has offered no clarity and no paths for any of this stuff. It finally looks like we're getting on a path to be able to do that stuff. And that's one of the biggest problems that I have with teams that like come to us is that they've had to exist in this environment. And then it's like, okay, well, how do I clean up a points program? Or, like I've already got, 30% allocated in these SAFs. How do I honor that? And that's the whole reason that we get low float, high FDV, token issuances. And like this is just a systemic problem, and we didn't have anything until MetaDAO, and now we have a lot of different alternatives, but I still think MetaDAO is the best given the legal and structural things. I think that the other implementations have really weak legal arguments on like what happens in the event that these like entities are acquired or these things happen because they take minority share or minority positions in these companies, or they do debt issuance, and all of this stuff is good, but it's not, like this is not how like you get a crypto native implementation of this thing that could stand on its own 2 feet and say it's a lot like what we have in the traditional space, but it is completely crypto native in its expression and its implementation.
Yeah, good. I think you make good points there. The industry feels very much in a place where, you mentioned sort of the regulatory climate. In this case, it's, I think we went through a period of time where regulations were regulators were being a bit too stringent in some cases, and that was kind of holding things back from happening. Now it does appear that maybe we're entering a period where people are actually asking for more regulation and more clarity, and maybe some more rights in the case of token holders, for example, and setting up some clear kind of standards for these things. We're really relying on like, the desire or maybe the goodwill of certain teams to say, oh, we're just going to choose to house everything. Like the foundation is the token, and then everything is, the labs team and all the associated teams are kind of housed underneath that. But that's certainly not the standard, as you've pointed out.
Yeah, and how do you express that outside of what people are doing today, right? Like you say it, and then you use revenue to buy back your token, and that's the two places. And it puts a startup in a very precarious position. And I don't think that that's fair for how we're going to progress as an industry as well. But this is the regulatory environment we were in. I mean, Uniswap is a great example. We used to use that as the example of failed token voting. But the regulatory regime, rightfully may have put a lot of consideration into invalidating token-based governance in that decision, right? Like we knew that the Uniswap token would go up in price if you could start to deliver value back to the token. And, it's unfortunate that was the environment that couldn't succeed in, but market-based decision and governance, if it was sufficiently decentralized, and that's the argument that I would make, that market-based decision making is way better than token voting, because like the tokens don't exhibit the underlying behavior of a share necessarily, right? Like at least we have the argument that this is a novel mechanism that hasn't been implemented anymore, so it merits at least a conversation about this stuff. But yeah, I think that we probably would be in a stronger position. And then, I think that the labs and into foundation structure, like it worked. I don't know how well it's been challenged or how well we've navigated it. I mean, it's very early in its infancy with it all, but it seems to be like the status quo. But the status quo wasn't there until you paid lawyers to figure it out. And I think we're doing the similar thing here at MetaDAO right now.
Shout out to Peaq for sponsoring today's episode. The machine economy is here. Devices are monetizing data for their users all over the world. Tokenized robots are generating revenue for token holders, and the first machine economy free zone is live in the Emirates. And it's all happening on Peaq, the machine economy computer. Head to peaq.xyz to find out how you can benefit from the age of automation. That's peaq.xyz. Thanks to Sablier for sponsoring today's episode. Sablier is the leading on-chain solution for token distribution, trusted by teams like Maple, Immutable, and Axie Infinity. The #1 distribution protocol on EVM is now live on Solana. Automate your airdrops and token vesting, streamed by the second, transparently and trustlessly. Secure, audited, and ready for Solana builders. Get started at sablier.com. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. A lot of talk about the sort of buyback curse. I guess I'd love to dig into, for MetaDAO specifically, and even the projects on MetaDAO. But of course, MetaDAO itself kind of runs on the design and the principles of the project that the other tokens launch on. So you guys are kind of adhering to the
We're dog
system as
our
well.
Our own
exactly. Yeah. You're running the model. So I guess the ICOs have been pretty popular, and from what I understand, like a lot of new revenues, like that's a big new revenue stream for the protocol itself. Obviously, you're talking a lot about how it doesn't make sense to spend all of your money buying back your tokens. So how are you guys thinking about like the future here, forward growth, like what to do either with that revenues or with that runway that you have from the sort of the Futarchy design?
Yeah, I mean, I think it's important that we scale infrastructure, we scale the protocol, we design the mechanisms. We know that this is not in-state Futarchy, so there's a lot of stuff to grow there. I think MetaDAO's like fundamental thesis at a highest level was to be the MetaDAO, so the DAO of DAOs, and I think that opportunity still exists in the medium to long term. But I think right now, the utility and the function of the token, I always say this to everybody, is a proposal away from telling me what to do next. So I think that is probably more important. And I think people will get more and more familiar with ultimately like how this stuff works. And then they'll understand the categorization of the tokens so that they don't come ask, what is the utility? Why aren't you buying back and burning your token? Like everybody asks now. I just don't think that's healthy, but it's the same thing that happened with NFTs. Where's the roadmap? Where's the docs team, right? Like the first NFTs launched without any of that, but then investors became acutely aware that if they weren't buying, an NFT with the docs team, they're probably likely to get rugged. So similarly here, right? If the team's not buying back the token, but the expectation is just that like the token has no value ultimately, and the team's expression of value or its interest in value is to use the revenue to buy it back. But I don't think MetaDAO, like I think about it in that way at all. I'd make a strong case against like buybacks at this stage. But at some point there becomes a point where the asset is undervalued, and the best use of your capital is to buy back undervalued asset because you don't have anything else you could do with the capital. But I don't think that we're there yet. I don't my argument for Uniswap was that Uniswap is at least mature in the ecosystem, and that may be the best use of their capital, just given everything else. But I don't know that a 2-year-old Perptex is best use of or a 3-year-old, block engine machine is best use of capital is doing that. But it's hard to say how else do you express it, and I completely sympathize and empathize with the situation that we're in today.
So I guess with the future in mind, then to shift that conversation a little bit, is it just full steam ahead here with kind of the sales platform and just trying to onboard more founders to doing unruggable ICOs and like launching kind of Futarchy based projects, or do you have other sort of pathways that you guys are thinking about as well?
Yeah, I mean, I think ultimately right now it's a path towards permissionless. How do we get this? And, I spoke earlier on that I don't think that there's a systemic risk to the permissionless model like people would have in traditional launchpads, right? If you launch a shitty project, they run away with the money or they don't do anything with the token, there's no recourse. And that is a systemic risk to all launchpads. But in our case, that could be cleaned up. So I don't think there's that. I think that right now, it's how do we make sure that the high quality examples exist and that there are case studies so that people understand how to interface with this market. So teams that come in, click a button, and then they're like, I'm just going to raise is not, that is not the formula. The formula here is you should still have a product probably built and launched on mainnet, even if you're heavily constraining that. You probably should have, 100 people that understand what the product is and what you're trying to do, right? This is not designed to replace you going out and speaking to VCs. This is just saying that the VCs will come to you and you should be able to pitch them very well. At least pitch 100 people that are going to have, faith in what you're doing. So I think if we get those models out, then it's easier for people to do a comparison and say oh, I'm a lot like this. I feel like I have what it takes. And then ultimately the market is the arbiter there, right? Like either you raise your min goal or you don't. That's where I'd like to be because I'm not an early stage investor. I'm not an angel investor. So why should I be in the seat that's dictating this? But I do think it's important that people have a good experience and a good understanding of the mechanism. And as we're changing the mechanism, I think we're addressing a lot, like we talked, start with Mountain Capital to where we are today. I'm talking about an implementation that is under audit right now, right? That needs to go out there. We need to see whether it corrects the behavior that we were expecting. And yeah, I think that is the short to medium term right now. I think the legal structuring is going to be another thing, which unlocks a ton of potential for people to be onboarded into ownership coins with existing tokens. People that want to bridge their assets over to come over to Solana, I want to be prepared for that. I think that we constantly hear, are you going to bring it to another chain? I think we're open to that. We're not shut down. I don't think that Instagram sells itself because it's Kubernetes cluster and its use of Kafka behind the scenes, right? It sold itself because you can share, pictures and like buttons. But, same with blockchain, that's still my underlying thesis. I don't think that it matters where it is. This is just where the functional interface with the treasury, with the intellectual property, with the decision making. But there's no reason you couldn't have a bridged asset and still have the same behaviors in trading and whatever the hell you want, right? It doesn't matter that it's locked in an ecosystem. I just think Solana is where we could do order books. We could do everything. It's low cost. It's, it's improved a ton too from the time that we started with it all as well. So I don't think that that's, it's on our radar, but it's not something that's a top priority. And then post that, I think that we want to build Futarchy. We still share the vision that is Futarchy will replace C-Suite. We have to get there. How do we get there? And I think one thing is exposing more people to the tokens, to the proposal process, to the markets, and then improving those markets designs. I mean, we've worked with Robin Hanson directly. He's got some ideas on how to bring statistical Brownian in motion and use that as your evaluation criteria on the behavior of the market. And you're like, great, how do we build that on chain, right? So we know that time-weighted average price is not the end state. It's also not really great at revealing new and important information towards the end of a proposal. You can imagine transferring me $10 million, I get hit by a bus, right, a day before the proposal's over, but it already is on track to pass. Time-weighted average price, you may have to push the price to infinity to prevent that from going out. So it's not great. We understand that. And so I think improving that mechanism, and then ultimately the long-term vision is hopefully we get to the point where DAOs are doing mergers and acquisitions, that you have big umbrella corporations and entities that are out there. You have multiple business units. And that'd be like the grand vision of what we see MetaDAO to be at some point.
I think your comments on sort of the VC angel investing side are really interesting. What I find interesting as well, like the discourse around MetaDAO, is that I see both support and pushback from kind of differing sort of funds. So I don't, maybe it's incentives at play, maybe it's just personal beliefs about how, those markets kind of structure themselves. But it is an interesting point to just say, if folks want to raise, like, come here, the deal flow can just be centered around here. And we don't, you don't necessarily need to go out and find those people. If they're looking for that flow, it's presenting itself sort of on chain. The question I would have maybe on the legal side is, you've mentioned some things there. I'm wondering if the design here with Futarchy and like how these organizations are structured and the IP rights and all of that, is this a response to the opening up of like a little more friendly regulatory climate, like in the US and maybe even other places in regards to crypto in recent years? Or could a Futarchy have existed in like a 2021, 2022?
Yeah, I mean, like Marshall Islands definitely, had the regulatory arbitrage where they created a headless, they accepted a headless algorithmically managed entity. It's a DAO LLC structure. So there are like places that you could do it. Now there's no precedent set. There's no like legal, legal defense that's been had for any of this stuff. So it's still like wide open. And I think like there is like a risk profile here that says, what are we trying to do? Is this trying to build something that it's not, or is it or are we skirting too close to the sun? But like my like true belief here is that, like this is a crypto native primitive. This is a, like theorized management mechanism, and it's all exists in contract law. You and I could set up a business together and we could say, the way that we're going to make decisions for this business is we're going to shake a magic 8-ball. If we both sign that and that's the terms contractually, it's weird, like who knows what that could affect, but like contractually it's just, two parties have agreed that this is the way decisions are going to be made. So I don't think we're in like any like violation. I think the question becomes, when you have this mechanism, what are the downstream effects from it? What are the emergent properties that you now have to take in consideration? For example, what does beneficial owner mean when you can't exert the power of what a beneficial owner should normally be able to do, right? Like that is a question to be, relegated to the judicial system to say like, all right, help us figure this out, or get legal opinions around it to say like, hey, there is some precedence here that if you look into, the fact that this information is so public, that everything is so transparent, that the amount of influence that can be exerted is, like pretty unique in all of it. I think that like the novel mechanism gives me high faith that I would have operated this in any regulatory regime. But outside of that, I think we are starting to see a lot of emergent things that are coming up. And it does look like we may get safe harbor. It does look like, we've got tokenized stocks on these things, right? Like whether they're truly stocks and how this all stuff works behind the scenes. But it does seem like we're heading in that direction. And I have this fear, that there's this systemic risk that tokenized equity will come on chain and it will wipe clean all of the crypto that came before it, right? Like there will just be this epoch that says, like before tokenized equity, it was just fun and games and the crypto industry couldn't regulate itself. So like daddy came in and cleaned it all up. And I think that would be totally unfair to like everybody that's tried to build something and do something here. And so that's why I'm so impassioned by what MetaDAO is trying to do. It kind of pairs this all together and says, here's a crypto native solution with a novel mechanism that could be uniquely implemented in the crypto sphere to do what it wants to do. And we don't have to go back and say that they can coexist. But I think that there is this time that we have before that becomes a reality that says we could say that tokens are cleaned up, that there is some mechanism, that we have exerted some power here that does make this comparable in many ways of like wanting to own it.
That's a great point you make there. I've heard this concern sort of talked about by other folks like within the space. I will say, the current form of tokenized equities and even like perpetuals on tokenized equities are not quite there yet. There's a little bit of volume. I think there's people are getting excited about some of the perps on Hyperliquid, for example, seeing 9-figure volume on the NASDAQ or something like that, but still very, very small relative to like the true equities markets. But there is a concern there of like, well, if all these things come on chain and everything that currently exists on chain is like kind of fake or not real, or there's no rights for token holders, or it's all kind of, phony, then once people realize like how great, being a shareholder is in comparison, you do potentially run that risk of saying, well, screw it. Like, why would I trade this when I can trade these other things? These seem much better for me.
On the KYC, whitelisted, compliant, like you will have a compliant, Uniswap that only KYC'd individuals swap between. And like, that's great. I want to co-opt the adoption of crypto selfishly because I've put 10, 11 years of my professional career in it. And so if it was to fail flat on its face, I'd feel kind of silly. But I do think that that's how you continue to like develop this industry and these primitives, and you have the basis there, right? Like this stuff can be, whatever is whitelisted can be run without a whitelist, and you can create these markets that are just more liquid and probably have better behaviors. But I do understand the constraints, right? Like these are real things that like people have concerns with or have legal compliance concerns with, that say like, listen, my counterparty cannot under any circumstances be North Korea. And DeFi has not solved for that. Like as much as we would want to do and make sure that the stuff, but like it goes against the core ethos there and, the implementation of it. So there are like a lot of interesting like evolutions there, just like cash does not prevent money laundered cash from entering the system. Right. But it's the banks, it's the institutions, it's the way that it comes out of the system that's when they start to catch people. And I think that may be sufficient for us to say that says, listen, Circle's the issuer USDC, they have unilateral, freeze authority, like they are the responsible party, or exchanges or off ramps are the authorized parties of where this stuff needs to be like managed. In the meantime, outside of that, maybe not. But yeah, like I completely agree with that idea. And I think that it's likely that it's going to come one way or another. I just hope that we as crypto could have like offered something and said like, hey, we can actually do this ourselves, and that it could compete rather than need the TradFi adoption for it to succeed.
Gotcha. And we're saying, and you're hoping clearly that Futarchy and MetaDAO are potential solutions to that.
Yeah. And, like structurally, like this stuff I expect mimics, I expect competitors, I expect people to do this implementation because it should work. And if it works, then it's even better. Profit and I want to win on that regard. But, I talk to people all the time, especially people that are starting to branch out and build like more comprehensive prediction markets and other things. And I've talked to people throughout the time of MetaDAO's existence where they're like, oh, there should just be a simpler way to do this. And I'm like, all right, well, sit down with me for 15 minutes and think, oh, this is actually pretty hard. Oh, how did you guys do this with your UI, right? Like, how did you guys figure out how to do all this stuff? And it's like, there's been 3 guys in the entire world that have thought about this implementation more than anybody else probably, right, in the world for the time that it's been. So I'm welcoming and inviting because like this is what drives competition. And if somebody can come up with something better, I'm happy to like adopt it and say like, listen, we finally found the end state for this stuff. But like, as far as I know, and as far as I've seen right now, we've got some really constrained views and some limited views on like even the implementation itself.
Gotcha. Well, I think that's probably a good place to leave it off. Kollan, are there any last thoughts you have, maybe just about MetaDAO, where you guys are headed, your path into the future, or just the state of things on Solana to come?
Yeah.
Otherwise, it was great chatting with you.
Yeah. No, I love chatting with people. I'm happy to be in touch over Telegram. I set up meetings, a lot of meetings weekly, and talk to a lot of different people across a broad spectrum. I have investors, I have liquid funds, I have venture capitalists, I have founders. I'm here to explain this to you because I understand that like this is a hard thing to grok. And sometimes I see traders come in and within 3 seconds they understand it. And sometimes with lawyers, it's 3 weeks later. So if you're interested in this in any way, if it like piques your interest, I'm happy to sit down and talk with you through this concept, these understandings, like how this all works, and pitch you on it. And, if you don't feel like, because Profit is an anonymous entity or pseudo-anonymous entity, you can't find somebody that's not going to be on camera and talk to you, reach out. And then, if anybody has any feedback or, if you're a high quality founder out there or a founder that's looking to raise, I'm here to talk to you about all of that stuff and guide you through it. I'm really excited to see what we can do with crypto. And always excited to speak with Blockworks because they built the first dashboard for tracking our performance across the AMM and the raises. So that's been really fun.
Love that. Definitely reach out to Kollan if you're interested in learning more about MetaDAO, getting involved. I will say, I'll give a shout out to from the Blockworks team. I know Luke Leisure wrote about Futarchy maybe a year ago, if not longer ago, about kind of the original design. And then Carlos more recently, maybe a few months ago, wrote about the kind of the rollout or the expansion into the ICO marketplace. So yeah, we've been followers, we've been listeners, we've been paying attention. So it's been great to sort of watch this journey. But also today, it was great to chat with you, Kollan. Would love to have you on again sometime. Maybe when next big sort of step change or 50 more launches down the road after you guys have tweaked a bunch more things, we can talk back on more of the learnings then and see how things have been.
Absolutely.
Awesome. Thanks so much. And to the listeners out there, we will see you next time.